First of all, thank you for having me, and it's a great pleasure to be in the COP28 and to be in Dubai, a vibrant city. Yeah, when addressing your concern about what's happening in the market, and I see that investors generally, sometimes they are confused when there is lack of information. But for me, what I would want to say here is that we need to differentiate between two things. First of all, these shocks happens to emerging markets. And we need to differentiate the idea of having a shock that sometimes affect, the appetite or affects the outlook, that short-term outlook, and country resilience. Egypt, as a country, as economy, as a market, has been resilient to several shocks over the past few decades. And like many other larger markets, in the emerging markets, I would say, have went through these shocks, which is mainly related to interest rate hikes in the US, which basically makes the market for debt much more scarce than it used to be before, and liquidity is not as it used to be. So this kind of things, we're used to it. The point is that investment bankers, and I used to be an investment banker myself, I believe we make mistakes, okay? And in the past few, I would say 30 years, investment bankers have identified Egypt as a large consumer market, 100 million consumers. And I think this was a mistake. Egypt is not just 100 million consumers. Egypt is a great hub for reaching out for larger export markets. Egypt has many trade agreements that, if utilized, will provide enough foreign currency revenue that would be able to allow to absorb any kind of shocks like this one. For us in the SC zone, we are lucky because our direction and most of the investors that we receive are directed towards export markets to utilize what Egypt has in terms of resources, human capital resources, natural resources, location, and quite indisputably, okay, the Suez Canal location. I mean, we are around the Suez Canal banks, which provide us with a very hard to beat competitive position for addressing export markets. And therefore, we believe that most of our investors have been quite equipped to mitigate themselves by having enough foreign currency revenues to avoid this kind of shock. Well, I mean, as I told you, most of our investors haven't faced the problem because they have already foreign currency revenues. I mean, the issue is that when you are very focused only on the local market, okay? And this would happen to any market. If you are only focused on the local market, you are basically you have a concentration risk, okay? But if you diversify, if you expand, then you wouldn't have the problem. In our case, most of our investors are addressing their products to the international market. So seriously, talking to investors, I have to also talk about something else. When we are attracting new investment, most of it is greenfield. So we don't have an issue about valuation, the Egyptian pound, how to evaluate existing assets that we are selling. So we are lucky in this area as well. SCZONE was established by a law in 2015 that have integrated the industrial parks with the seaports, and having the seaports had added a very strong element of financing support for the SCZONE to finance its infrastructure, particularly since revenues from ports are in foreign currency. Therefore, we hadn't also, as an entity, we didn't face much challenges with regard to foreign currency availability to develop our infrastructure facility, unlike the mainland. Yeah, in terms of the steps that we're making, we're doing it on different fronts. First of all, the reorganization of SCZONE itself, as you can see, I'm coming from the investment banking side. Our chairman also used to be on the investment banking side. So having the right team to talk to the investors, we understand the investors, we understand their concerns, we know how to solve it. We are deal makers, so we can, move ahead with fast decisions, and we can even sell our ideas within the government corridors. Okay, so I believe this is a very important part, is to equip SCZONE with the right team, the people who speak the language that investors need. This is number one. Number two, in terms of reforms, the government is quite aware and quite keen to develop investments in the country and in SCZONE in particular. So the government has been working on a new set of incentives that will probably be announced soon once it passes the parliament. So this is in terms of reform. And in terms of restructuring the processes inside, we are actually going through a digital transformation stage within SCZONE with the help also of our partners from multilaterals like EBRD, who are working with us right now to digitize all the services that we are providing to investors, so that we can be much more efficient, much more oriented towards technology, internet. So in this area, we believe that we will have strong and big milestones to be achieved in the coming near future. This is a very important part, because when we are offering to our investors, we're not just offering an industrial park, we're offering an integrated industrial park with the seaports. And for investors, they see it as a very instrumental part, because it helps them move their goods faster, more efficiently, reduce the cost for their production, and then makes them more competitive. I mean, makes their products more competitive to address export markets. So this is very important. The fact that there was a law that was passed in 2015 to integrate six seaports, 3 of them on the Mediterranean, 3 of them on the Red Sea, with the industrial parks of SCZONE, have created the competitive advantage that we are keen to develop and to improve as well. This is one thing. The other thing is that we are investing heavily in infrastructure. We have expanded our seaports since it was handed over to SCZONE. Now we are working with Sokhna Seaport, where growing the quay from 3,000 meters to 21,000 meters. So actually times 7. So this is for Sokhna. Same thing is going for East Port Said. We are also working very actively to bring partners to operate with us, those seaports, partners who have experience, who have marketing outreach, who can enhance and improve the development of the ports. And one good result that we achieved over the past year is that East Port Said was ranked number 10 by the World Bank in terms of container handling. So we're very happy with the results we're achieving, and we see that it's like we are reaping the fruits of the investments that was taking place over the past few years. We have a plan for infrastructure mapping for the different industrial parks that we have, and for the different sectors that we are addressing, quite on top of which the green hydrogen. So we have a plan of investing in infrastructure of around $2 to $2.5 billion in different areas, whether it is water desalination, whether it is substations for power, whether it is for wastewater, and also for creating what we call shared facilities for different industries, whether it is automotive industry or the green hydrogen. And in all these infrastructure projects, we will work very actively to partner as well with the private sector. To answer your question about the public-private partnership, the government has issued recently a strategy for private participation and government participation in the economy. And they have set several sectors that the government would want to withdraw out of it. And there is already an existing law for public-private partnerships that has succeeded in the past. I mean, even like 20 years ago, Egypt had a PPP for a power station on the Mediterranean. So we were very, we were among the pioneers in the region to work with PPP frameworks. So we don't need to change the framework. The idea had to do with the strategy. The strategy before was for government to step in, and this was right, because the private appetite after the aftermath of 2011 and the Arab Spring, the appetite from investment for private investors to step in was not there. So the government had to step in and lead the way into development and progressing the economy. So now we believe with what have been done in infrastructure, it is time for the private sector to step in. We believe that the stage has been set for investments to be made. And we also know that the coming, we know how to run roads, we know how to run transportation, public transportation, but to run desalination plant, to run every substation, to run seaports, it's better to provide it to the private sector, who has proven also to be much more efficient. So to answer your question, we don't need to make changes. We believe that with the existing frameworks we can be very successful. The idea is about creating the environment and encouraging the appetite of investors. Last year, we have attracted $3.6 billion of new investments to the SCZONE. And in the first 4 months of this fiscal year, starting July 2023, we have attracted 1.3. Now we are working with EPRD to launch a new tender to make a PPP project for water desalination. Among 4 phases for water desalination plant that we have for the development of the overall industrial parks, and especially for the green hydrogen. And we have received a strong appetite. I mean, I was talking to one of the investment banks that I've been meeting during the COP28, and he's telling me that they would expect up to 300 bids on this particular one. And the quite unique thing about this particular proposition is that we're not having a Ministry of Finance guarantee. We're not providing that. Why? Because basically we have a natural offtake from the investors that we have in the industrial zone itself. So we didn't need to do that. There is quite big, ambitious plan, and we're quite excited about it. Last year we had 23 MOUs, 9 frameworks. Now the MOUs number has been reduced. Why? Because we were very adamant to show that we're very serious. Those investors that would not show that they are serious will not be on our pipeline or schedule for the future. So we were very clear that who will not deliver on their due dates, their MOUs will expire. So now we have 19 MOUs, but we have 11 frameworks. So with frameworks, you have commitment from the investors, so they are committed now. We believe that it is going very well. The pace might be slow because of the nature of the industry and the challenges that the industry is facing, but it is one direction, in my view. And around 3 of them has already secured off-takers. So it's developing. Few of them are for green bunkering, of course, to utilize the location. But I think the largest number is for green ammonia and hydrogen itself. Because one of the things that we are very keen to develop is not just the green hydrogen industry, but the green products that depend on the green hydrogen. Because one of the things that we are working very hard to do right now is to bring the off-takers to establish their business in the SCZONE, so that we are bringing the off-takers right next to the producer. estimate was around 85 billion when we were talking about 9 framework agreements. With growing the number from 9 framework agreements to 11, I believe it's around $95 billion now. This is the estimate to be invested over the coming 10 to 15 years. Okay.
That figure was announced in
Yeah.
2027.
Yeah.
Correct. So how much of that do you think would materialize in the coming 3 years?
I think within the coming, before 26, we will probably have like 5 billion materialized. Before 30,
Yes.
because this is a very strong, a very important milestone with the CPAM in Europe. I believe this number could quadruple. So we could talk about 20 billion before 2030. Why China and why SCZONE? Okay. China is one of the largest countries that has outbound investment around the world. Okay, so it's naturally for us to address China as one of our prime targets for attracting investment. And Egypt, on the other hand, is providing the Chinese investors with a very good springboard to be nearshoring their markets, like the main European market and the US market. And as I said before, Egypt enjoys a very strong position with regard to trade agreements with many economic blocs around the world that are very important economic blocs. Therefore, the Chinese investors have seen this. This is number one. Now, the second point, of course, as I said again, the indisputable positioning of Suez Canal is helping because China is at the far east of the world. So they need to make sure that their routes are cleared and that they have very strong presence around all these stops on the route. And Suez Canal Economic Zone is providing them with a very good location, very good trade agreements. And of course, I mean, with what's happening globally, with the pandemic, the geopolitical tensions, all investors around the world have started to, there was a big rise for the concept of resilience. So all investors need to diversify their producing locations. And the largest producer in the world, the factory of the world is China. So it is clear, and it doesn't need much to think about to understand why the largest manufacturing need to diversify. And when they diversify, they need to find the right location. And the location, I mean, it's very hard to beat. So we are taking advantage out of that. And the good thing is that we also are developing the business. When you look at the Chinese investors, they like to work with countries that they have strong political relationship with. And our government has very keen to make sure that the political relationship is growing stronger every day. President Sisi visited China several times. President Xi visited Egypt. So, and they met several times in different, events and different locations. So the relationship has been growing on the political side. Economically, investors, they like to see this. When they see the relationship is strong politically, they understand that there is more comfort to do business. And with the location, with the incentives, I believe we're offering them a very good offer. Nearshoring markets, in addition, of course, to the Egyptian market. I mean, the Egyptian market is quite a strong base to build on and to reach to the larger market. But as I said, this is a direction that we need to make sure that any investors coming is not just focused on the local market, trying to focus. And the good thing with this, I mean, because every crisis comes with an opportunity, the good thing about what we have now as a global issue with regard to the inflation is that investors have started to realize that Egypt is a location that you need to step in, but to address larger market share on the export side. The last roadshow only, we had several agreements. One of them was Energy China for green hydrogen project of around $5 billion US. Another transaction was United Energy Group with around $7 billion of investment for chloride potassium investment. In addition, there is also a China glass company that has a $500 million of investment. So in general, I think we have attracted in the last roadshow only around 15 billion US dollar of investment. I mean, not all of them have materialized. We're working very actively now to facilitate and to engage with them even on the feasibility studies and the research studies that they need to develop and all the environmental areas to conclude it faster and to have these materializing as soon as possible. I believe that our part of the world will become developed together, cooperatively between the different countries, and we will see with this development in Saudi, in the UAE, in Egypt. And in Egypt, we are focusing very much on the car industry, and there was a strategy that was developed by the government to grow the car industry in Egypt. And we have a dedicated plan also for the car industry, and we have worked on establishing a mapping how to address them and how to attract car manufacturers to the SCZONE. We have dedicated an area in East Port Said for car manufacturing and vehicle manufacturing in general, including even carriages for trains. So what we have in plan is to facilitate their business, provide incentives that can reduce their capex by having shared facilities as well. So this is a plan that we're working on with several partners from the private sector, building on other success stories that took place in other areas. And we have seen recently an agreement that was signed with EBRD also to finance the studies around this. So we believe that in the near future we will have several announcements in this area, particularly East Port Said, regarding new investment coming in the car industry. So this is one of the industries that we have very focused on. In addition to the feeding industry in the car industry, we have already recently had a signature also for tire manufacturing within the zone. So in general, glass for, everything that has to do with the feeding industry for the glass, for the car manufacturing.
But this is cars in general or electric cars specifically?
No, in general. But of course, with the growing market for e-vehicles, there is a focus on e-vehicles as well. And the market in Egypt, with depletion of natural resources globally, everybody needs to focus on the green, renewable energy. Okay, so e-vehicle is definitely on the top priority, but generally speaking, car manufacturing is definitely among our priorities. Other industries is feeding industries also for renewable industries, because with the positioning that Egypt is offering in the renewable market, including the resources in solar power, the resources in wind, and the availability of land, has positioned it to attract a lot of investments in the renewable market. So with such market, we create, we have crossed the critical mass that is needed to invest and build, manufacturing facilities that cater for that, including glass for solar panel, including the solar cells, including the wind blades for the wind turbines. So this is something that we're very keen, and we're working closely with many investors to develop this. In terms of financial performance, being in a government agency, our numbers are not for public, so we're not a listed company. But what I can mention here is publicly available information is that we have crossed the 6 billion Egyptian pound of revenues last year for the first time, and we believe that we will keep growing.